Good morning, everyone. Marty Mazzori here, June 6, 2019. Want to update you briefly on the charts, actually, as you'll see in a minute. In front of you is the daily S&P 500 chart that we created way back in here. The other day, I pointed to this top of this trend channel here as being potentially some pretty stiff resistance. And for most of the day yesterday, this is a one-day chart, so you can't see all the daily action, but for most of the day yesterday, it just kept butting its head right against that line, shot through there at the end, closed above it. Today, we've had a really nice move thus far, although we're coming back off of that here a little bit, and I want to talk about some crazy volatility that we've seen today. But right now, we're holding above that. Now, we wouldn't say this is an official breakout of this trend just at this point. Typically, you come back and you test it once or twice. It'll be interesting to see if that happens. Could even happen today. Then you test that and bounce above it. So talking from a purely technical perspective, this isn't a bad look. This is a way too steep rally, of course, so that is utterly unsustainable. So what happens is you got to come back and you're going to test some lower levels. Right here, this trend line coincides with 2800, which has been both support and resistance along the way. So that would be potentially double support. So we'll see how the market can hold up against that. So this is looking interesting from purely just a price movement standpoint. It's a little more inspiring looking to me than it was even back up in here. You may recall in here I had very little faith that 2800 was going to hold, and it didn't. But it's looking a little better just again from a price action standpoint. Now, when we layer in the indicators that I think are important, like for example, on balance volume. So what we have here is we obviously have what we would call distribution. On the down days, we've had much bigger volume than we've had on the up days. So when we track indicators like this, what we're looking for is we're looking for bullish divergences or bearish divergences that go counter, let's say, to the price action for a specific period of time. We had a real bearish divergence back in here that I pointed out right back up in here when I was suggesting that we should be looking at a rough patch. This pattern right here is a bearish pattern, same pattern as you see up in there. And then we had some really good action, really good accumulation, so we paused right in here. So right now, if you take the price action, you go from here to here, you see we're getting back to this level. But during that point, we actually have on balance volume going from here to here. So that's not any confirmation that we should expect that we're going to go barreling through this, at least not in terms of what's going on under the surface as it relates to volume. When we look at momentum using the moving average convergence divergence, we're looking for divergences again. As you can see, as the market was rising in here, you can see the momentum was waning. That was a bearish divergence. Had the same thing back in here. That's why I was very cautious at these two tops. In here, we actually had a bullish divergence that didn't work out. Right here was when the CFO of Huawei got arrested, and that precipitated the worst December, at least that's my view of what the catalyst was, the worst December since 1931. This was a nice bullish look. We came out of that. But again, we tracked all this along the way. Nothing here right now that says this is something that we should get excited about or devote a lot of capital to. Lastly, the RSI, or the relative strength indicator. I did have a pretty bullish look back in here, and that's when I was talking about a bounce that really never developed. Well, we're kind of getting that bounce in here now, and I guess I could draw a line from here to there and say it's not a bullish divergence, but it confirms what's been happening of late. But when we take the line across, it's pretty much straight across. So again, there's nothing in these indicators here that I use a lot just to kind of gauge short-term expectations that say this is something we should get really excited about, at least at this juncture. Now, let me show you my live chart pack here that I keep just going all the time just to see what happens on intraday developments. Just a little while ago, we got a monster move up in here in the S&P. You can see it was just, these are 1 minute bars, by the way, and this is a live chart. Just a huge rally right up there. And I didn't see any immediate news, but I didn't need to. Here is the Mexican stock index. And this is what happened there. So it told me that something positive is developing in the ongoing trade talks with Mexico this morning. And what all it was the folks who are there in Washington. The president is in Europe, and he suggests that tariffs are going to go into effect on Monday. But they said that they may be able to not do that, or at least delay them. Well, as you can see, it was a huge bounce for less than a minute. And in terms of the Mexican exchange, it came right back down pretty much to where it's been trading. US market is actually holding up better than that. What it suggests here, I think, as it relates to the US market, is that, maybe we're not going to slap tariffs on all of our trading partners. The thing that's helping the US market out a lot this week is a real dovish turn in terms of rhetoric on the part of the Fed, suggesting that they will be more than willing to cut interest rates if the economy continues to show some of the weakness that it's been showing of late. So interesting day, to say the least. In my written post this morning, if you caught it, I closed with, I anticipate continued huge volatility in both directions for the time being. So the graph I started with this morning pretty much tells you that we should not get too excited, at least not based on what I'm seeing in the technicals. Certainly a conclusion that there'll be no Mexican tariffs on Monday, I think would lead to a bigger rally, certainly in Mexico to say the least, but also in the US as well. But at the end of the day, as I've continued to reiterate, and I will continue to until it's over, until we get the uncertainty of tariffs coming from, of all places, the United States, onto the world scene, I just think global markets are in some jeopardy, as is the global economy. Right now, our assessment is that we're still in expansion mode, but not as much as we were, just a few weeks ago. So right now, these rallies are nice. Nothing that's really that inspiring, either technically or fundamentally, on a short-term basis, to say we're once again off to the races and off to new all-time highs. I'll leave it there for now. Thank you, as always, for watching and listening, and of course, much more to come. Take care. Bye-bye.